Good morning and thank you for tuning in for the Laybuy Group Holdings Limited Q1FY22 results presentation. I'm Jane Morgan, the Investor and Media Relations Manager for LBY, and I'm pleased to introduce to you our Managing Director, Gary Roloff, and our CFO, Katrina Kalkadi, to run through our Q1FY2020 presentation.
Okay, good afternoon everybody from New Zealand, and welcome to Laybuy's Q1 results presentation. For those of you I haven't met before, I'm Gary Roloff. I'm the co-founder and managing director at Laybuy. I'm joined by our CFO, Katrina Kalkadi.
Good afternoon everybody.
And Katrina will obviously pick up the conversation around financials as we move through our presentation. So, been another great quarter for us. Pretty excited about the results we're going to present to you today. So we'll get right into it. And obviously, as usual, we'll take questions at the end of the presentation. So looking forward now to sharing with you what we have achieved over the last quarter. So here's just a brief highlight slide for you. And you can see where after that first quarter, we're up 58% year on year in GMV. Our revenue is up 70% year on year, and our UK GMV growth up 107%. So we continue that growth trajectory that we've promised you, our investors, and the market since listing back in September, and we continue to deliver on those results. Our NTM is at 2% of GMV, and that's up from Q1FY22. That is up from 0.5% year on year. I guess the great news from my perspective and from us as a company is that our active customer numbers are now just over 800,000 customers. So we're closing in on that magical million customer mark, up 75% year on year, and active merchants through 10,000 now, so up 84% year on year. So we remain on track to exceed our annualized GMV of $1 billion during FY22, and we're looking forward to sharing that milestone with you as well. You will all be aware that we recently raised 40 million by way of a placement and PCP, and that was oversubscribed, and we're very happy to have got that deal done. We've launched Tap to Pay in the UK, and that is providing a great solution for WH Smith customers and new retailers that we are rolling out as I speak. And we've entered strategic partnerships with Rakuten, Awin and Sovereign that are now expecting to go live middle of next month. So that's going to be an exciting addition to our business in the UK, obviously, as we now are able to offer our customers access to some household brands that I'll talk to shortly. I'm going to hand you over to Katrina, and she'll talk through the next slides around GMV and financials, and then we will she'll hand over to me and we can work through the remainder of the deck together. So over to you, Katrina.
Great. Thank you, Gary, and good afternoon, everybody. As Gary's already alluded to, all our metrics are certainly heading in the right direction, and you can see by these graphs, we can see that GMV quarter on quarter is tracking well above our magical Q3 quarter, which was our biggest quarter of all time. So we're certainly on track, and we continue to exceed those milestones of the biggest quarter. Annualized GMV is at 738 million, as Gary's already spoken to in the opening remarks, and our active customers and active merchants depicted down the bottom also illustrated of what Gary has already spoken to in his earlier opening remarks. In terms of financial information, you can see that apologies, I was flicking through too quickly there on my own paper track. In terms of revenue growth, quarter on quarter, we're up to 10.4 million, split between 6 million from the UK and 4.4 from the Australasian region. Australasia continues to grow very favourably for us, but the UK is obviously where our growth engine is, and that's starting to come through in the revenue contribution. Annualized income, obviously the quarter times by 4 is at 41.4 million. The income by type, we're starting to see in the UK that the late fee revenue contribution is starting to come down, and as a result, late fee revenue contributed 42% to our overall revenue, which is down year on year from 43%. So as the market does continue to mature. We would expect that to continue. Gary's already spoken to the NTM being at 2% for the quarter. On a 12-month trailing basis, that's 2.1%. In terms of the key financial and operating metrics, GMV is up year on year by 58%. That has converted to revenue being up 70% year on year for the quarter. That's largely as a result of the commission or the merchant fee income that we earn as a percentage increasing. So you're all very familiar with the breadth play and bringing on more SME players, particularly in the UK. So we're seeing that our commission has grown more favourably from 3.6 for the quarter FY21 through to 4.1 for the quarter just closed. So it's a real margin play on that one, which is great. Annualised income, the split between late fees I've already spoken to, so we are starting to see that track downwards as a contribution to revenue. And NTM at 2% for the quarter has slightly come off where we were for the Q4 of FY21. That's a result of defaults, particularly in the UK, and they've come in at 2.5 for the quarter. With the defaults in the UK, though, I would say that they have almost halved where we were this time last year. So whilst we have seen a little bit of an increase for the quarter just closed, very much we've seen significant improvement in there, and there's no real concerns from what we're seeing coming out of that region at this time. Active customers and active merchants just depicted here as well, which we've already spoken to in the earlier slides with the graphs. That was all I was going to cover off in that slide. I'm just going to hand back to Gary and we'll cover off the regional performance.
Thank you, Kat. So as you can see, those financial results here are ones that we can be very proud of when you start seeing the sort of percentage uplifts we've had in income, in GMV, particularly in that UK market, and the 143% and 424% increases in customers and active merchants respectively. So pretty proud of where we're headed and what I would consider is continuing to deliver on the promise we have made. Obviously now the UK is dominating our GMV. The regional performance we're talking to here in the UK continues to deliver what we had hoped. We are increasing our active customers and active merchants. The GMV has come up again after Q4, as we would expect, and we are anticipating significant growth over this quarter as we roll out the affiliate program that I will speak to shortly. Australia and New Zealand, we're really making some headway here, and particularly in the Australian market, as you can see by some of the retailers we have added over the last quarter, the likes of Adore Beauty, the likes of Missy Empire and Colette. And we continue to add some very significant retail names out of the Australian market, which is fueling our growth. A lot of these retailers obviously are trans-Tasman in the way they operate, and we are able to offer them significant customer numbers here in the New Zealand market, which is of interest to them. So we're pleased with the way that is growing as well, and our team here responsible for ANZ is doing an outstanding job in keeping us growing at those sort of rates in what is obviously a mature market for us, which is New Zealand. From a strategy and outlook perspective, I just wanted to highlight some of the merchants that we have added in this first quarter. And the Australian names, many of you will be familiar with: Board Riders, Adore Beauty, City Beach, and Stateside Sports. New Zealand, we've launched with JD here, and they'll be opening a store here shortly. We've also launched across the MTA network, which is around, from memory, 3,200 MTA stores, if you like to call them, to describe them. In the UK, these names are big names for us, and Stitched, which now has the Manchester City store merchandise live on there. We're also live on Fanatics, selling quite a number of items through the Manchester United Direct store on Fanatics. In fact, Manchester United sales are in our top 20 every day, and we haven't even started the marketing campaign with them yet. So fans are loving what we're offering and finding what we're offering as well. This affiliate marketing network is something that we're really excited about, because what this does for our company is create access to an enormous number of brands across the UK. Over the course of FY22, it opens up access to 5,000 retailers. We're obviously not going to open up all 5,000 at once, but we have got a very, very solid group of retailers that are coming through to participate in this. And these are just some of the names that I'm sure most of you will be very familiar with. I mean, Amazon explains itself, ASOS you'll be very familiar with, and obviously eBay, Marks and Spencer, Lululemon, Adidas, Estee Lauder, Reese, B&Q. All of these retailers are now going to be available to Laybuy customers, and I just can't wait to see this roll out and get underway. I think it's a really exciting shift for our company. Just to reiterate the retail market in the UK, I've said this before, but I would reiterate, I think the UK is grossly underestimated in terms of its size of opportunity there. I'm not going to just highlight a few of the numbers there. You know, online sales have risen threefold in the past 10 years. The annual growth is 45% in online retail. Online sales as a percentage of total retail have increased from 19 to 28%, largely as a result of COVID, as we will all appreciate. And our growth as participating in that year on year was 500% as at 31 March. And you'll just note that for the quarter 30 June, we're up 107% on that June quarter last year. So off the back of significant growth in FY21, we're continuing that growth into FY22. So we continue to deliver here. I think what's interesting too is the point of sale financing in the UK is only 4% of retail sales online. So there's a long runway here. There is a huge opportunity for Laybuy, and we have carved out a position for ourselves in the UK against some pretty significant competition, I might add, where we are recognised as one of the three major players in that market. And we're just very, very proud of what we're achieving there, and we are going to continue to focus on that UK market and maintain and increase the strength of our position in that three-player recognised market that is the UK. Just to give you a sense of total retail over there, £400 billion, online 113 billion, and point of sale financing within that 4.5 billion. So we really do have an enormous opportunity here, and I think there is slowly becoming a recognition of just what the opportunity is in the UK and our position in that. And I think that's something that we can't reinforce enough. From a FY22 perspective, we're still on track to exceed our GMV of $1 billion. We are still on track to deliver our income growth between 90 and 100% on FY21. And that MTM, as Katrina has spoken to, continues to improve on last year. The first merchants that will go live as part of this affiliate program are listed there. There is actually 200 retailers that will go live towards the middle of next month. That's August. And we've just listed some of the most common names for you so that you have a sense of the sort of retailers we'll be offering our customers access to. So that's our presentation for the quarter. Again, thank you for your support. Thank you for listening to us, and we're more than happy to answer any questions you may have of Katrina or I. I've got a question. Could you please elaborate on your statement in the quarterly that you do not expect to be able to draw down on the debt facility with VPC given recent discussions with them? Regarding this, what is your strategy going forward regarding financing the UK receivables book, noting that page 17 of the deck continues to reference VPC under global capital management? So look, great question. Thanks for that. Kat and I have talked about on a number of presentations over the course of this calendar year, the work we've been doing on capital management, and particularly around the debt facility that we have with Victory Park Capital. We wanted to find a debt facility that was more efficient for us for Laybuy. And so we entered into discussions with Victory Park on the basis that we wanted out of their facility, of which would, so that we were enabled contractually to talk with alternative lenders. We have gained that from Victory Park. We have had conversations with alternative lenders. We have a term sheet in front of us right now that we are okay with. It requires a little bit more finessing on our behalf, we think. So our intent is to use this time and somewhat freedom, you would say, to put in place the right debt facility for the company that will see us gain more efficiency from what we're doing with our capital. So I hope that answers your question. So I've got a question from Tony Watts. Where do you see the share price going? Tony, in my view, and Katrina and I obviously talk about this a lot, whilst we would love to be able to influence the share price direction, the market tends to make up its mind about that. All we can do is demonstrate that we deliver on our promises and that we are growing ahead of expectation. And that's all we can focus on. Our focus is all about growth in that UK market. And I guess my hope is that the market starts to recognise just how big Laybuy is in that UK market and how well we're doing in the face of an opportunity that we've recognised a long time ago and we've taken every advantage of. So on a personal level, of course, I'd love to see the share price go up. I don't think there would be a CEO on the planet who would say, I don't want to see my share price increase. That's exactly where I'd like to see it go. So I'm just looking at the other screen to see if there's any more questions. Just wait a tick. Are you open to takeover discussion? Question from Steve. Steve, it would be the obligation of myself and the board to entertain any discussion around corporate activity. That is our role for the benefit of shareholders. So short answer would be yes, obviously, but that would have to be for the benefit of shareholders. Now, look, it doesn't look as though anyone has any further questions. I can only hope that as a result of what Katrina and I have presented today, we have given you all the information you require to recognise that we are delivering on what we promised, and the company continues to grow in the right direction. So again, thank you for your time this afternoon. Thank you again for your support, and we look forward to updating you after our September quarter with some more good news as we see the impact of this affiliate program and the rest of the work that we and the team are doing to continue to drive Laybuy growth. So thanks again, and talk soon. Bye now.